One of the problems with recruiting for investment banking is not the knowledge or skills you acquire, but the access to talk with real investment bankers to put your best foot forward. Our sponsor, WSO Academy, can provide those connections with 60 head mentors who are finance professionals at top firms like Goldman, Centerview, and JP Morgan. Imagine being able to get on the phone within 24 hours with one of the Academy's 1,300 mentors right before a critical interview. Get on the waitlist for WSO Academy today by clicking the link in the show notes or by visiting wallstreetoasis.com/academy. All right. This is Investment Banking Insights. My name is Alex Mason and I am your host. This is the show where we're talking about both the technical and non-technical aspects of the investment banking process. But right now, we're getting into accounting. That's what we're all about right now because we need to understand the fundamentals before we can even get to those tricky questions in the 400 investment banking guide. Because if we don't understand the basics, then how are we going to understand the advanced stuff, right? So we're doing that right now. And we're going through talking about all three financial statements, balance sheet, and now we're at the income statement. So let's go ahead and wrap up our discussion of the income statement right now. We talked about different versions of profit or different variations of profit in the pursuit of net income in the last episode. And right now, I want to talk to you about a couple of different expenses that we're going to see on the income statement. But more broadly speaking, I want to talk about the different aspects of a business in general, because that's going to help us understand where these operating expenses fit into the big picture. But first, quick note on terminology. You may hear me say things like costs and expenses. Those can be interchangeable terms depending on the context, but you may hear or see them differently. So if you hear the word cost, it's usually associated with the product or service being sold. Expenses is kind of a more general term. So just a quick note there. Now, moving on. So talking about operating expenses, I want to define them for you and help you understand the 5 aspects of any business. And this was a very awesome concept when I learned it. And I think it applies here, and I think you'll find value in it too. So understand that in the broader context of any business that you're inspecting or valuing, there are 5 parts of it. There's sales, there's marketing, there's finance, there's value creation, and then there's value delivery. And I'll go over each of those briefly. So first of all, you have sales. A customer has to give you money. A customer has to give you money. Otherwise, you don't have a business, right? So there's parts of the business that are focused exclusively on that transaction. And as an investment banker, guess what? You're helping with sales. You're helping a business sell itself to another business. Or in some cases, you may be on the buy side, helping a business buy another business. So sales is critical. Next, you have marketing. Now, marketing is really what happens before sales, because before people actually exchange cash for something that they want, they have to first know about it. And marketing helps increase awareness, usually for a specific target group of customers. Then you have finance. If a business is not profitable, eventually it will fail. Eventually it will fail unless it continues to raise money. That's it. If you're not profitable over a long enough period of time, a business is just not going to work out. So the underlying economics of any business have to make sense in order for the business to continue to be in business, or the official accounting terminology is a going concern, quote unquote, going concern. I always think that's kind of an interesting term, but finance is super important. Then you have value creation. Why does the business exist? What are they selling? What are they giving society that people actually want? Value actually has to be created by the business in order for people to want it. There has to be some kind of demand there. And then there's value delivery. It's not enough to create something of value. It's not enough to be profitable. It's not enough to be able to sell something and market something. You could do all of that, But if you can't get your product or service to your customer in a way that they are comfortable with and accept, then it doesn't matter, right? They didn't get the value. So that's something that's very important. Also, I think distribution often gets neglected in business conversations. It's kind of an afterthought, but hey, it's super important. Imagine if you ordered something on Amazon that said 2-day shipping, and then 10 days later, it hasn't gotten here yet. And you're like, where's my package? Where is it? You can tell I'm speaking from personal experience here, right? So anyway, those are the 5 different pieces of any business. And I say all that to say, let's now talk about operating expenses, and you'll see how these things work together. So there are 3 main categories of operating expenses that I want to cover right now. Now, what is an operating expense? It's an expense that isn't directly associated with making a product or service. So remember we talked about cost of goods sold? This is kind of like the complementary category to that. So cost of goods sold relate directly to the product or service. Operating expenses do not directly relate to the product or service. And here are 3 categories. The first category is sales and marketing. So we just talked about this in the framework of the 5 aspects of any business. Somebody has to let the customers know about your product, and that's called marketing, which then leads them to contact with people who are close to the deal on that product or service and actually facilitate the transaction. That's called sales. So marketing is letting people know about what you have to offer, and sales is actually closing the deal. So sales and marketing expenses are important. Then you have research and development. Research and development. Now, this is also abbreviated R&D. Research is understanding what already exists, especially, say, a state-of-the-art discovery or knowledge in some field. And development is using this knowledge to experiment with what might exist in the future. So imagine you run a yo-yo factory and you have a certain research and development budget for your yo-yo factory. So the research department might be researching the physics of yo-yos, might be looking at the different polymers or thermoplastics that have historically been used in yo-yo components. And your development team may be building prototypes based on new material science that's come out of the literature. And you want to experiment with different types of polymers or composite materials. And then you create prototypes, and that ultimately leads to a future product line. So that's an example of research and development. And I've actually built a yo-yo in the past, by the way, and so it's very fun. But that's an example of what R&D is. You're trying to understand what's out there, and you're trying to develop something new. Look at companies like pharmaceutical companies or big industrial companies like 3M. They have huge R&D budgets because it's critical to their business. Not directly related to selling anything today, but nonetheless an important aspect that helps them innovate. And then the third category of operating expenses I want to tell you about is kind of this miscellaneous section called general and administrative. This is where many people's salaries get paid. There's a lot of support functions that you need to help run a business well. Think about functions like corporate finance or human resources or a quality department. These are aspects of the business that don't directly fit into like a sales or marketing or the value creation aspects of a business, but they're still very important. How do you manage your people? How do you hire talents? How do you manage the books of the business? These are all really important aspects of how businesses run. So those are your 3 main categories of operating expenses that I wanted to share with you. And you're going to see these on income statements when you look at them. So sales and marketing, research and development, and general and administrative expenses. And then just a recap, because we're wrapping up this section on our income statement. Remember, what is the income statement for? It helps us understand the answer to the question, how profitable is this business? How profitable is this business? And it shows the company's actions to either increase its assets or decrease its liabilities on the balance sheet. It doesn't always happen, but that's the goal. Now, let me rephrase that because I know I just kind of threw in the balance sheet real quick there at the end. I don't want to confuse you. So if a company is working on increasing its profits, what does that mean? It means eventually it's going to have more cash, right? or it's going to have more assets. Those go on the balance sheet. They're building up the balance sheet. Now, decreasing liabilities, that's something like if you're increasing your profit, you're reducing your expenses, those expenses can tie over to liabilities on the balance sheet. And so, income statement, you're trying to be profitable. That's what I'm trying to tell you. So that is a wrap up of the income statement section of this little 3-episode series here. What we're going to be talking about next is the cash flow statement. We're going to be going to our third financial statement and talk about the cash flows. So let's go ahead and talk about that next. But until next time, my name is Alex Mason. I am your host, and you're listening to Investment Banking Insights.